Hi, good morning. Today we are pleased to have Mr. Ben Kwong. He's an executive director at KGI Asia. He's also head of research of our research team in Hong Kong. Good morning, Ben.
Good morning, Joel.
It's good to have you in Singapore.
Me too.
Okay, it's an exciting time for
Yeah.
the financial markets given that this week there was a single tweet by President Trump was able to move the markets. However, Hong Kong's stocks have had a good start to the year. The Hang Seng Index up from 25,000 points
Right.
in January to 29,000 points
Yeah.
currently. How much do you think is due to fundamentals and how much is due to sentiments or fund flows?
Basically, I think the value is mainly driven by liquidity. After the Fed indicating more downward stand, and then the Hong Kong investor expecting that the interest rate would remain unchanged for a period of time, and that is quite positive for the Hong Kong stock market. And so that's why the Hong Kong stock market rebounded strongly in the first quarter, and amid the trade optimism. However, due to the recent change, and then the market have a short-term correction. I think it's quite expected, this correction, because we have conventional wisdom in Hong Kong, and that is quite applicable to the Hong Kong stock market, is go away and sell away and go away, sell in May, go away. Yeah, so this is a kind of curse to the Hong Kong stock market. So I think that the recent trade tension just provide an excuse for the Hong Kong stock market to correct its previous gains. But in terms of the variation now, Hong Kong is still reasonable. So we believe that if the interest rate environment continue to maintain at the low level, and then the Hong Kong stock market will still have quite good resilience.
Yes, and I think you mentioned previously that May has, from a statistical point of view, May has always been a bad year for
Right.
the Hong Kong markets.
Yeah.
So looking back over the last 30 years? You
Let me share with you the statistic.
Yes.
In the past 10 years, 7 out of 10, we have a negative return in May. And in the past 21 years, from 1998 to 2018, 70 years, we have a bad May. So that means that May is not a good month to buy shares. Actually, I would, from a contrarian angle, I think
Yes.
May is a good month to buy share on dip.
Yes.
Yeah, but not a good month for holding shares.
Okay, yeah. In that case, which sectors are you positive in Hong Kong?
Now, we still have to follow the policy. So that's why we have what we call the policy favored sectors. For example, like the Greater Bay Area,
Yes.
a lot of the Chinese property company with huge land bank in this area will benefit from the development. And also we have 5G concept. Previously talking about the infrastructure will related to the road and rail, but nowadays 5G actually is a data superhighway. It's also another kind of infrastructure and investment.
Yes.
So the 5G will continue to be the focus this year. And also we expect the China Asia's market will continue to fare better this year, after a very bad year last year. So those life insurance company, they have huge investment in the Asia's market, will benefit from stronger Asia's market. And also those Chinese security firm, I think will, particularly those with the major contribution from the iBank business, will benefit from the launch of the Science and Technology Board in June.
Yes.
This year. So we expect some tech stock will also benefit from the launch on this board.
So the new be similar to a Nasdaq of China.
Yes,
Okay.
but that board will be tailor-made for those professional investors.
Okay.
Because the central leaders want to see those high-tech stock listed locally instead of going overseas, and then they relax a little bit the condition for the listing in China, and then offer more choice to the local investors.
So the professional investors, I think they are also private investors, but with a minimum
Yeah.
criteria.
Yeah, sure.
So in Singapore, I think it will be similar to accredited investors where they need a minimum income or
Yeah.
minimum assets, investable assets.
But if you don't have accessible accessibility, and then you can play with those related high-tech shares in Hong Kong.
Okay.
There's still many.
Yes. So the key point is that Hong Kong still has a lot of proxies to
Yes, correct.
to the Asia markets,
Yeah.
which are still out of reach for many retail investors.
Right.
And are there any sectors that we should be cautious about?
The sector should be cautious. There will be those related to people's livelihood.
Mm.
Like those, a lot of parents in China nowadays complain, so, the kid education fee is too high,
Yes.
and the government will do more. And also those are related to energy, like the electricity supply, gas supply, and also the medical costs. They want to, the government want to reduce the burden, and then they will force those pharmaceutical company to lower their product price.
Yes.
And that we expect the pharmaceutical stock will be underperforming this year.
Yes, I think that has been a key issue for the Chinese in terms of the cost of living.
Yeah, that's true.
Yeah.
Particularly when the pork price is going up.
Pork prices, yes. So
Yeah.
that's adding another
Another G.
another G.
Yeah, we are talking about the 5G. Now we have another G is PEC. So we expect the pork price will continue to go up.
Yes.
And then the investor will try to find opportunity in those related shares, and that will offer some share price upside.
Is there any pork related place in Hong Kong?
It's very popular stock that previously have a very good run is a Wanzhou,
One Chow.
288.
288.
Yeah, but recently the share price has come down significantly due to the trade tension. But if the trade dispute can have some positive development, and then maybe Wanzhou will have a very sharp rebound.
Okay. And I think moving on to something that impacts everyone, Hong Kong is the most expensive city in the world to buy residential property. Can I just ask what have been the key drivers of that price appreciation, and what kind of risk can cause home prices to fall back?
You want to buy property in Hong Kong?
No, but in Singapore
I
is the
think you will
second.
be very disappointed. It is very difficult to see the property price coming down by more than 20%. No
Yes.
bargain.
No bargain.
Yeah. I think it's mainly because of the very limited supply. Yeah, because of the difficult to develop the new land in the short term, and also those investors have a very strong holding power amid the low interest rate environment, and so I
Yeah.
think unless the interest rate going sharply, otherwise the property market in Hong Kong is very unlikely to have a significant correction. So that's why we still quite bullish about those strong asset play in Hong Kong, like those REITs and property developer with a good name like the Sun Hung Kai, Henderson Land. They have a lot of agricultural lands that are available for further development, and also offer quite good yield. It's
Yes.
about 3 to 4% yield. It's not bad at all.
Yeah, for property, and
Yeah.
property is always quite big in
Yeah.
in the context of Asia.
Yeah.
And if interest rates were to hold steady or even be cut, you're saying that this will be positive for the Hong Kong markets.
Yes, because China Asia's market and Hong Kong stock market have a very sharp correction last year, And this year, I think that investors are more willing to find the opportunity to make a better return. Comparatively, in terms of the variation, the Hong Kong stock market now just in the middle. It's not too expensive and not too cheap. And so, for example, like the Hang Seng PE is around 11 to 12 times, is slightly above the 5 years and 10 years average, but
Yes.
still within the range. So, so we don't expect the Hang Seng index will drop too much or rise too much further. But for individual stock, there's still plenty of opportunities to play with.
Yes, it's Hong
So
Kong is
have
always
to ask our research in Hong Kong.
research. Yes,
Yeah,
Hong
for
Kong is
shopping.
always there will always be opportunities in Hong Kong, and I think a key stock that we are unable to avoid is Tencent.
Yes.
Given that Tencent is so ingrained into everyday life in China.
Yeah.
Maybe you can just share with us what kind of price level should investors be looking at for Tencent?
I'm now expecting the share price if coming down to 360. I would be very interested.
360. Currently, I think the price is around hovering close to
380.
380 to 390.
Yeah, something like that.
Yes.
But when it's about 400, and
Yes.
there will be selling pressure. Yeah, because many investors buy above the 400 level.
Oh yes, above $400.
Yeah, the $400 level. Another thing is the now the company earnings in a transitory nature, because of the company is trying to reduce the reliance on those online game contribution and
Yes.
focus more on some other new service like the cloud, and that can help to serve the real economy more. But it need time to develop. So in terms of the variation, I think that the Tencent is still command a significant premium. So this will continue to limit the share price upside, but the downside either, because
Yes.
it is a really very popular name in China and very influential in people's daily activities. So I expect that there will be a very strong support at around 350, something like that.
Yes, these companies are riding on the key structural changes in the economy, such as big data, cloud, and artificial intelligence. Yes, I think they are also investing a lot into all this new technology.
That's true.
So
Just like Ping An Insurance, a lot of investors in Hong Kong, in other countries, like to buy the shares because Ping An have a spy subsidiary, and then they are also engaged in those fintech,
yes,
and also has a potential to have a separate listing, and that will further realize the undervalue of the Ping An company. Tencent have similar situation.
Yes.
They had a lot of investment in this new economy stock company, and that have potential for separate listing.
yes, and it is quite a powerful market because the messaging platform of Tencent has I think close to 1 billion
Right.
users on that.
Yeah. Yes. So
Uh,
very influential.
Very influential.
Yeah.
Yes, very
WeChat.
we,
You can rely on WeChat more than the other apps in China.
yes. you need
It's an dominant position.
you need to pay and buy your
Yeah.
train tickets as well.
Yeah, just like the Hong Kong. Hong Kong, actually, some people say is Hong Kong is like a financial casino. Oh, okay, good. You have to buy the operator there. So the Hong Kong Exchange is an operator of this financial casino. So because of this unique position, Hong Kong Exchange is also a stock well watching,
Yes,
particularly when the share price coming down to 250,
250.
you have to buy.
Okay.
But reminding you to sell ahead of 300 because many people also buy above the 300 level.
Okay.
Yeah.
Yes. And I think there's a few developments going on for Hong Kong where they announced that they are tying up with MSCI
Yes.
and the Hong Kong Exchange to include index for or indices for A shares.
Yeah. So in that case, normally I think that will give further impetus to the Asia's market movement. And then for some company with exposure in this area, as you just mentioned that like those life insurance company
Yes.
and securities company, and then they have a bigger exposure to the China Asia's market will be the sector we are focusing on. Particularly for those life insurance company, actually, you know, the major contribution is from the investment in the Asias. If the
Yes.
Asia is going up, it's a kind of a proxy for you to play with the Asia's market movement.
Yes.
Yeah.
And talking about Asia, given that the current hot topic this week is between between China and Trump and the trade
Yes.
war, what's your view of the current tensions between these two countries, and do you expect resolution anytime soon?
I don't expect resolution soon, but you know, it's such kind of game theory, where it's approaching to a critical moment, and to have agreement, and each party will try to threaten each other in order to gain more bargaining power, right?
Yes.
But I think eventually maybe the talk will be further postponed, or that means that the further negotiation will go on, and we don't expect there will be an imminent trade agreement.
So that would be bad for markets because the China trade team is currently in the US, and the US the administration in the US has said that they would impose tariffs this Friday.
Yes.
So that means the markets might see extreme volatility by this week if
Definitely.
definitely. Yeah.
Definitely, the market will have some sort of a panic reaction in the short term.
Yes.
But we expect that after investor coming down, and then they believe that if that will further hurt the economy, and then the both government will introduce more stimulative measures to support the economy,
Yes.
and of course that will be welcome
Yes.
by the investment community,
Yes.
right? So I'm not too pessimistic, but I'm not optimistic either.
Okay.
It just depends on the level of the market. So it's maybe the trade war is bad for the investor who are holding shares, but I think it's good for those investors. They already sell the shares at a high level, and
Yes.
then buying back when the market on dip.
Yes, and I think there were a lot of investors, a lot of retail investors that did not participate in the current rally. I mean, in Singapore, the STI is up 12%, but it pales in comparison to the Hang Seng, which is probably up 15 to 20%,
Right.
and the Shanghai stock indices are up 30 to 40%.
Yes.
So there are a lot of people who benefited, but there's also a lot of people I think that did not participate.
Yeah, Joe is correct. I think that the Hong Kong stock market, that's why it's so interesting to investors, is because of its volatility.
Yes.
So that means if you can capture the market movement to buy low and sell high, and then you can increase your rate of return. So that's why we always recommend the clients to buy not for holding,
Yes.
but buy for selling afterwards.
Yes.
When the share price is going up, everybody is too optimistic, then you can get out.
Right. Well, thank you, Ben. So Ben has a daily commentary on the Hong Kong markets where he highlights the key events in the financial markets and on some of the stock picks that he mentioned just now. If you want more information, you can go to www.kgieworld.sg. Well, thank you, and
Thank you.
hope to have you again in Singapore next time.
Thank you, Joel.